When you register a business entity, the IRS chooses a default federal tax classification for you. But what if that designation is costing you money? Form 8832, which allows businesses to determine their own tax classification, can be a game changer for optimizing your business tax strategy and even avoiding double taxes. We're eForms, and we break down tax, legal, and financial matters into simple, actionable steps. To get access to an official IRS Form 8832, click the link in the description below. In this video, you'll learn what IRS Form 8832 is, who can file, tax implications, some frequently asked questions, and more. First, what exactly is an 8832? Form 8832 is an IRS tax document used by a business to choose how they will be classified for tax purposes. Businesses can elect to be classified as a corporation, a partnership, or a disregarded entity using this form. The IRS will then use this information to determine reporting requirements. This form cannot be filed electronically, it must be mailed to the appropriate IRS service center. It's important to note that if a business doesn't file an entity classification, it will fall into one of the following default categories. Businesses with 2 or more members will be considered partnerships, and businesses with a single owner will be considered disregarded entities. The following can elect their tax classification by filing Form 8832. LLCs, partnerships, entities that previously became a corporation by filing Form 8832, foreign entities that became a corporation under the foreign default rule. This form is not for most corporations, 501(a) tax-exempt organizations, real estate investment trusts, entities electing to be an S-Corp. They'll use Form 2553 instead. What choices do entities have when filing Form 8832? The classification selected will change the way an entity and its members file taxes, and it will look like this. Association taxable as a corporation. The business will become a C corporation for federal tax purposes, which eliminates flow-through taxes that members must pay on their personal income. Partnership. Entities classified as partnerships report income to the IRS, but do not pay income taxes. Instead, partners report gains and losses on their individual tax returns. Disregarded entity. This is the default classification for single-member LLCs. They will file under the owner's SSN or EIN if the business has employees. When does the new classification take effect? You can't use Form 8832 to change your business classification more than 75 days before filing or delay it more than 12 months after filing. If you miss these deadlines, you can ask for an exception in the late election relief section of the form. The IRS might approve it if you have a valid reason for being late. Now let's go over the steps to filing. Number 1, verify eligibility. 2, choose the appropriate entity type. 3, complete Form 8832. 4, mail the form to the IRS Service Center in your state. 5, retain proof of filing. 6, look for notice of acceptance from the IRS within 60 days. 7, attach the form to the entity's federal tax return or information return for that year. 8, ensure the entity's members file their taxes accordingly. Before we go, let's cover a few frequently asked questions. Who has to sign? Any authorized person like an officer, manager, or a member can sign. If filing for late election relief, all of the affected people and authorized persons must sign. How can a business change its classification? If a business has already chosen a classification and isn't new, it must wait 60 months to change it. The IRS might allow exceptions if over 50% of the ownership has changed. And that's your full breakdown of IRS Form 8832. If you're ready to start filling out your own form, click the link in the description below to get access to an official version. Thanks for watching, and don't forget to subscribe for more.